Of the morning, top of the morning, back at it again with another one. And today, we're looking at the Nasdaq. Just a quick shout out to everyone that's been rocking with us till now from when we first started off the channel. We are about to hit our first 1 year anniversary of actually being active, so it really feels good. I just want to thank everyone for being with us, being part of the journey up until now, and let's grow together. I'm very excited to see where we'll be this time next year. So let's just keep going. Today's trade, like I said, today's video rather, we'll be going over yesterday's trade, the AM silver bullet. So it's the trade between 10 a.m. and 11 a.m. Eastern Standard Time. Just gonna start off on the weekly chart just to get a bit of our bearings and bias as well. I got a nice comment the other day asking for more videos on daily bias, so I'm still putting that one together, but I am going to be making it a thing that each video I drop from now on, I also speak on how I came to my daily bias and as well as my session bias and as well as my weekly bias. But all of those other details pertaining to bias will be put in another video that I'm still cooking up. But like I said, moving forward, for every breakdown and video that I put out, or for every trade that I was involved in, I'll be sure to also mention how I came to my bias as well. So without wasting any time, we had this week, right? It pushed up and everything, but I felt like it was a bit overextended. We've been pushing bullishly since the beginning of what month was this? That was since the beginning of June. Actually, the first week of June we've been bullish. Second week of June we've been bullish. Now in the third week of June we've been bullish. Let's go back to the daily. We've been very bullish. So we had a very, very hectic expansion on Monday. That gave us the low of the week and as well as our high for numerous days. Tuesday came. Tuesday we didn't close above the high set on Monday. Let me just zoom in so you can see. As you can see there, it just nearly came up to it, but not exactly the same. So if I click on that candle over there, if you'll notice the top right hand side of the screen, look at the high. That high value, the H, when I hover upon this candle, it's 20,271 points and 25. Well, 20,271 and a quarter of a point, right? Whereas this one is 20,270,000 and 2/4 of it, of a point or a half point. You know, so the one is 271.25, 270.5. So yeah, Wednesday came, we started pushing slightly up above. Wednesday was a public holiday or a bank holiday, so we pushed slightly above, attacking that buy side. Once I saw that on Wednesday, although I wasn't really looking to trade the Wednesday, I knew that if it's a bank holiday and that happens, then the bulk of the volume of the trade will probably come through on Thursday. And that's exactly what we anticipated. Thursday came and we saw price shooting up, and then London session came about, and then it began to reverse to the downside. And then by the time it was New York session, the bearish movement was in full swing, and we were able to take part and get involved in it. Let's go to the 1 hour. So I'm just going to speak on that. And yeah. So we started off, prior to this downward movement, price was steadily moving up. So then we framed our trade off of the hourly time frame. We noticed our change in the state of delivery. And what I had anticipated was price to close below that change in the state of delivery and make its way back into this range here, to perhaps get by at the 50% mark, which was this M15 fair value gap. I had anticipated that, and I had been fixated on that instead of being flexible, which is a lesson that I've learned, and I will definitely refer to it moving forward. But I wanted to see price do something like this. Close below the change of the state of delivery, come back up to this level, if not the highest M1 fair value gap, H1 fair value gap, and then progress down and attack the low of the week, if not close near that area. That's what we're looking out for. We didn't get it, but we got some very valuable insight. We had the hourly double top marked up, pierced above it, began to make our way down. This manipulation allowed us to have our projections. So if you take your projection fib, anchor it from the top there, bring it down, all the way down to this change in the state of delivery there, the standard deviations sort of give you an idea of where price could lead off to. I did something logarithmic. Oh, that's what I did. My bad. Anyway, you get an idea of where the projections could be. So I liked this low because it lined up in between the -2 and 2.5 retracement areas. So once we hit there, we can expect a reversal to the upside, right? But anyway, we got that. Change the state of delivery. Like I said, I thought it would close, or what I was anticipating was a close below that area, that CSD, a retracement up into the 50% range of this manipulation, or this price deck here. From there to there, I wanted to see price come to the 50% mark. Didn't get that, but I got something else, and that's what we're going to talk about in this video. So like I said, this is what I thought we'd get back up to. Price did its thing. 9:30 opened up. We had price shoot to the downside, and we had that 5-minute close below that change in the state of delivery. As price went down for that 9:30 movement, we opened up. This was before the fair value gap opened, but the candle at 9:35, as it closed, we opened up our fair value gap. So then one would anticipate shorts, but in my case, it wasn't yet time for me to enter, since my model only allows me to enter from 10 a.m. and after liquidity run has occurred, or liquidity has been swept. We get that 9:40 candle that closes through and above the 5-minute fair value gap, which now inverts this. We then get that 9:45 candle, that 9:50 candle. It goes through and closes past the 50% mark of that fair value gap over there. We've got that 9:55, the clear closure below the fair value gap, now hinting to us that this fair value gap is probably now bearish, since we are looking at it in retrospect. Then we get our 10 a.m. candle. Note the power of 3. So the candle opened, accumulation, the manipulation, and then the distribution. If we go down to the M1, we'll probably see that, but yeah. And then we proceeded to sell off. Then we even got a second entry, this fair value gap coupled with the order block, and then we had the change in the state of delivery as well. That would have been another awesome entry. From there alone, looking at the lows for today, that's 257 points, right? Crazy, absolutely crazy. So let's just further on dive in with that first one, right? Just gonna go to the M1 time frame now. And now that we look at it on the M1, it looks even more different. That notice these candles here, how there's a relative equal highs there, relatively equal highs, right? Got that sorted. I'm just gonna switch the template over to this buy side liquidity. So we have the liquidity resting there. That 930. Oh, the 930 is actually this up one. Oh, interesting. Okay. So our 930 candle slightly up. Our 931 strong sell. We got that close. Got that fair value gap over there. But we're focusing on the M5 one. We're focusing on the M5 one. Price shot up, ran these stops, right? Kind of looks like, I'd imagine it would look like a triple top if you had a line chart on it. Let me see. 1, 2, 3 before it makes its way down. So we took out that pool of liquidity, broke down, got the close below that M5 fair value gap, and it was giving us a number of opportunities. Look at the M52. You see how it's just wicking. Like we have no candle body closures past the 50% range of this inversion fair value gap. You notice that? You see how none of the candle bodies are closing above the halfway point of this M5 inversion fair value gap, and how everything is just wicking. That should have given us all the clues. So we had a good few minutes of price just screaming that hey we're about to sell off. And the final touch was that 10 a.m. candle here. That was the final touch, and then price just began to sell off. Just began to sell off. Beautiful run. Just gonna use this manipulation here to see if we could get a projection of where profits could be taken to. Indeed we did. That -4 level. Probably random. Well, we did get it actually, you see? That -4 level. Even though that just grazed it. Double bottom. This one came through and took it out as well. Very powerful move. That was if we had the entry there. I didn't take that. I thought and I knew I should have taken it because we had the order block with the inverse fair value gap. Let's look at it on the M5. It'll look nicer there. Inversion fair value gap. We took out liquidity on a lower time frame, came down, came up, tapped into that inversion fair value gap again, and then made our way to the downside. I should have taken that move, but it was just the first 15 minutes. I was relaxed still. Then I saw price come up. I noticed this range here. Notice this range. I didn't note how the fair value gap overlaps with the OTE. See this line here? That's the 0.62 level, right? Let me just put this to the other side. Just want to make it look a bit cleaner, you know. Saw that order block there. These two up close candles that lined up with the change in the state of delivery had this this fair value gap there. And in my mind, I knew that we have the higher time frame bias, which is bearish. You saw we took out the double high on the hourly / 4 hour time frame. The current daily high, or the daily candle, wicked above the previous 2 days highs. We closed below our change in the state of delivery on the hourly time frame / the 4 hour. And we got news that hinted that, stocks would go down. So should have sold there. Psychologically, I wasn't in the right place. I guess I wasn't as well prepared. My head wasn't really in the game yesterday, but that's fine. It is what it is. I managed to make up for it with the afternoon trade, which I'm happy about. I'll speak more on that later. And yeah, man, just another day at the office. This was a very fire one, though. Part of me wishes I took this, because since then it's just been down and down, It was then pushed down, and then that's when it gave us an opportunity to take the PM trade. So without going too far, just recapping. Run on liquidity. Break below the change in the state of delivery. Retrace back into that. Hit it. And then we made our way. Simple as that. Simple as that, Simple as that. In future, I just want to be more present and notice liquidity sweeps. The order of delivery is liquidity sweep, change in market structure or market structure shift, retrace back into a fair value gap, and then do best. We buy in discount and we sell in premium. That was the first entry. Second entry, order block, fair value gap, higher time frame change in the state of delivery or order block. Rest is history. Taking trades that are in line with the overall daily bias or direction or higher time frame direction. Can't go wrong with that. Devs can't go wrong with that at all. So I'm gonna call it a day. Thank God for the skill. I'll be paper trading today, so we'll see what happens. And yeah, stay safe.